Hello, traders. I'm just going to do a week recap here. This is Friday. This is post the Amazon and Google debacle. And basically, their numbers came in okay, but their guidance, they lowered guidance. And when you have, like with Amazon, 140 times forward price to earnings ratios, it's just like all these other high flying stocks. They're coming in and they're selling them off hard. And I think today's action is just the beginning of a much bigger move. Basically, we've got a trend line here that started back in 2016. And this month, we've already violated that trend line. I think there's a lot of optimism that we're going to come rally at the end of the month here and save this trend line. And we may not, but I'm not of the belief that it's going to happen. Basically, we managed to close right on this trend line yesterday, and this weekly candle is just complete breakdown today based off the Amazon and Google lower guidance, and they defended it hard today. And basically, what I'm seeing happening here, so many traders have are used to buying the dip on Amazon and Google for years now, that it's always paid for them. And basically, they're ignoring their longer term trend line charts. And the fact of the matter is that the trend is broken, in my opinion. Now, we are in a very strong uptrend channel still in the fib zones. So you do have that going for you, despite the fact you broke the trend line. And but I do think there is a significant change of character in your FANG stocks, and that it's going to take a much bigger move to bleed some of this uh, bullishness off the markets. So basically, my first target is coming down right here to the 110.20, 110.30 area, and or this fib line retest. So I'm thinking we are going to see a continuation of this sell-off into next week. Now, this is a head and shoulders pattern based on the 117.50 area. So if we get a continuation next week down to the 117.50, we might see the next couple weeks a responsive bounce for the right shoulder for a head and shoulders pattern. Then again, it could just completely fall apart. So, and considering their high valuations, the fall apart scenario is not out of the cards. Your Qs, they did close and break the primary uptrend. We closed below the primary uptrend that started way back in June of 2017. So we do have rolling over 50 MA, and we closed slightly below the trend line. So if this were to have a like the FANG, if this is a head and shoulders pattern, then we are looking at a price target all the way down to 155.75. Uh, SMH, that's your semiconductors, had a relatively inside day today after having a horrific week. And it had a lot to do with Intel Corporation, had some blowout numbers that came out Thursday night. So it kind of held this little area here so far. But I find you can look at these um, fan zones for significant corrections here. I do think it needs to come down and retest the fib fan before we have any sort of responsive buying. So that's just my opinion, and that adds credence to the fact that the Qs are probably going to have additional selling pressure next week. Okay, what we're having happen here on the shorter term time frame, this is our 50% FAM line right here. And we've been, actually, we didn't put in a higher high because we were on the bearish side of the uptrend, but we still continued up a little bit. And now we're totally rejecting that uptrend on our most broad look at the markets. And basically, we came down to this breakout area that happened back in September 2017 and a fib zone. Well, my personal belief here is that the selling pressure is not over with yet, because a 200 week moving average is not too far away here, okay, in my opinion. And the primary uptrend for support is way down here. Let's see, which Fed band is that? It's right down here at the 10.648. So we are still considerably above the intermediate time frame. And if you go out, actually that's a long-term time frame. I'm sorry, but if you go out here, you'll see what I'm talking about here. That the longer-term time frame is you're still bullish all the way down to the 10.673. So by going out there, you kind of see what's happening here. That this is a topping formation, and the breakout level is actually below your 200-week moving average. So even a retest of the 200-week moving average is not going to get you back down to the breakout level. So that's why I do really think you're going to see a retest of the 200-week or 200-week moving average here real soon. SPY today gave us a buying opportunity off the lows. We have this 2-candle bottom situation on our spiders, and we've got a responsive buy off that support, which I did take it. I went long to diamonds, and I made a 50% return, which could have been much more if I would have held. But that's the way it is. So just keep that in mind. This is still a topping pattern, in my opinion. So take it for that reason. This is not a significant support. These 2 candles off this trend are not a significant support bounce areas, in my opinion. So just keep that in mind. And if you go out in time, you'll get an idea here that the S&P's really had a healthy market, and so I'm actually thinking that because we've broken down into this zone right here, which we've never done before, that the uptrend is completely nullified, and any bounces are still shortable all the way down to this primary trend line. We could see next week possibly 250 area. So that's another 20-point decline on the S&P 500, in my opinion. And most likely we're going to retest the consolidation or this prior low. So that'll put us at the 255 area next week at some point, in my opinion. Your IWM had an inside day today, but I'm still not overly bullish the stock. It came up in it salvaged the price level, but the fib fan itself, we still closed below the prior swing support zone. So that lends me to think that this bounce that we saw later today is not something you want to get overly bullish about. Now, on the flip side, I do want to point out, you see that we had a doji candle on our IWM, and a lot of the reason for that is probably your regional banks. Because if you go in your regional banks, you had your inside day here, and we saw the interest rates coming in today. So all this fear in the markets are starting to lend that the Fed may not raise interest rates in December like they had surmised, like the markets seemed to think that they were going to do before. So if this selling pressure in the markets were to continue, regional banks might start outperforming the market and catch a responsive bounce here. And you definitely do not want to continue shorting your IWM or your regional banks, in my opinion. And also, it's also, I saw a sell signal in your Dixie today. And if that's the case, your commodities are going to start catching a bid. We might have a double top in place for our Dixie. And if that's the case, that your IWM also has a lot of exposure to your small oil companies. And so we could start seeing a bid into the oil space if we start seeing a continued bid into the commodities. And if you notice here, get a responsive bounce in our oil because of the weakness in the dollar, and that could this could be a swing, possible swing low for our oil for the short term. Okay, some sectors to look at. Your XBI, your biotech ETF, we closed near the highs of the near the close yesterday. The markets were closed way down, but the XBI is showing some relative strength here. They are trying to defend this prior price zone on your biotech. So that might be a buying opportunity if the markets were to catch a bounce Monday. And if you go out in your weekly, you kind of see what's happening here. That was a prior support area on your XBI. Now we are on the short-term frame. We are on the bearish side of the short-term frame. So every time I see the bearish side of the short-term frame, I'm hesitant to think that any type of bounces in a sector can hold. I have more a tendency to short the bounces, but it was kind of amazing to see the markets down the way they were today and to see the XBI close relatively flat for the day. Your industrials, XLI. Now this has me a little concerned. We have a breakout that started way back here in September of 2017. We came crashing down, and we got a little bit of rally back today. But and we are below the 50% trend. Okay, so that's a little bit more bullish. Like I said, pops are possibly shortable. So what I'm looking at right here is a failure of the prior breakout because of the relative speed of the slide downwards. I'm looking for a fail of that, and I'm thinking that we're probably going to be coming down to the 67 area potentially this week for your industrials. So just keep that in mind. Industrials kind of look like they're a broken pattern. We'll see how the week opens, see if we can get some responsive buying into the industrials. But so far, they're holding this upper distribution. We'll see what happens. And if you go on your daily chart real quick, you see the industrials, they did manage to doji out today despite a horrible tape on the markets. So if we were to happen to get a gap up Monday, that's something that might be buyable at that range lows if the markets do seem to be turning bullish. Now your retail stocks, XRT, they do have a heavy weighting with the Amazon, depending on what's going to happen with it. And if your internet stocks are starting to show some relative weakness, it's probably going to bring down this index along with it, at least in the short term. So I think it's a very high odds probability at this stage to think that your retail stocks are going to be coming down to the 200-week moving average, down here to the $44 level before possibly a Christmas rally. So just keep that in mind that I do think, despite what the talking heads on CNBC are telling you, that retail is going to see some relative weakness here in the near term. Now, on the bullish side, probably the most bullish stock out there today, and that was Tesla. And that was despite this afternoon around, I don't know, it was around 11:30, 12 o'clock. The FBI comes out and says they're under investigation for lying to the public about expectations on their Model 3 or some bullshit. Which, of course, everybody has watched the story about how Microsoft and Apple got started, and everybody knows that Microsoft basically got created off of fraud. I mean, they didn't even have a product in the works, and their whole company was born. And now the same thing, they're saying the FBI is investigating Tesla for a similar situation. I don't believe it. Well, the buyers came right back in, and they propped it up. But, yeah, Tesla was just totally on fire today. And it just doesn't look like there's anything holding it back here in the short term. So this is a a cult stock, and whenever the buyers start stepping up, it's about impossible to slow them down. So it wouldn't be surprised me to see it close to $400 a share before next earnings report, if the markets do happen to catch a rally. Well, that's all I got to say. But for the most part, I'm thinking that we're going to get a little bit more downside action first of the week. And my biggest concern are the FANG stocks. With them breaking that trend support, if let's see if we can, if they start unloading more of the high price earning ratio stocks, which I firmly think that trend's going to continue for a while here, at least till the first part of December. Okay, that's all I got to say, and good luck.